It's not just the price speculation or simply another short-term market pump. XRP is on one of the most crucial moments of its history. The real news is all around the regulations, institutional uptake, tokenization, and what Ripple has the potential to become in the future financial system. For years, Ripple has tried to get regulatory clarity and developed payment infrastructure that's adopted by financial institutions all over the world. But now, Brad Garlinghouse and Ripple seem to be at the table as key U.S. crypto conversations get underway. The CFTC CEO Forum, dedicated to tokenized, non-cash collateral, has elevated Ripple to the company's future alongside key players in the crypto industry. And that's significant because one of the most critical factors in gaining institutional adoption has been regulatory clarity. Now, it's not just whether XRP can survive, it's about how. It seems to be a question of whether XRP can be a part of the base of tokenized finance, which will enable real-world assets, payments, collateral, and liquidity to flow more efficiently through blockchain networks and traditional finance systems. It is this reason that many XRP investors feel this is a different period. Ripple has already endured years of pressure, such as the SEC battle, and the next step seems to be in setting the rules rather than simply responding to them. The Clarity Act has also been on the agenda, given that institutions are keen to understand the rules before they get 100% on board the digital asset train. Large financial companies, exchanges, brokers, custodians, and banks need to know exactly what they can and cannot do. They'd like the definition of digital assets to be clear as commodities, securities, stablecoins, or other asset classes, and they would like jurisdiction to be split between the SEC and the CFTC. If they're not sure, large institutions can be hesitant, as a big bank doesn't want to invest in infrastructure for crypto only to have to start over because the rules change once the next admin takes over. That's why the Clarity Act might be so powerful. If it proceeds, it could signal the end of regulatory enforcement and pave the way for various other actors, such as exchanges, custodians, tokenization providers, payment systems, and institutional capital to come in the space more robustly. This is also why XRP is in the spotlight. While many feel XRP already has legal clarity, there is still a need for more sustainable national legislation for the largest players to commit. Meanwhile, retail sentiment has been sluggish, and professional investors and big institutions appear to be getting ready in the shadows. XRP has been a coin that has been around for a long time, and it always seems to be on a plateau for a long time, only to break out when people least expect it. That is why now, with the thought of whale accumulation in mind, every regulatory change, institutional filing, ETF talk, and sign of whale accumulation is being followed more closely than ever. The broader Ripple XRP exposure, banking, custody, and institutional finance discussion includes Morgan Stanley, UBS, JPMorgan, Goldman Sachs, SBI Holdings, Santander, PNC, Standard Chartered, Bank of America, Cross River Bank, and BNY Mellon. The size of the first position is not necessarily the most significant factor. Rather, it is the signal that is more important. One of the largest wealth managers in the world, UBS, announced exposure to XRP. And even if it does not amount to a huge portion of its assets under management, AUM, there is still a level of interest that the broader market has yet to discover. It is here that many retail investors fall, stepping over it. Change is seldom an emotional process at the institution. They create plans ahead of time, they learn the rules, they monitor liquidity, and they get ahead of what is being discussed in public. Meanwhile, tokenization is gaining prominence throughout finance. DTCC has spoken about tokenizing liquid assets, important indexes, ETFs, and other assets, maintaining the same protections and rights of ownership as book entry assets. It's not about tokenizing just one asset. It's about developing the infrastructure to bring entire markets into a more efficient digital format. On-chain economy. Coinbase has also said is basically strong despite the low crypto prices. finance is becoming faster, cheaper, and more global. This broader transformation includes the rise of stablecoins, tokenized real-world assets, crypto trading volume, and the emergence of AI-powered financial activities. This is where the real fun starts for the XRP holders. Ripple has been associated with payments, settlement, liquidity, interoperability, and as a bridge asset in the past. The more real-world assets, securities, collateral, and payment systems enter the on-chain world, the more the discussion shifts from what XRP does to what it might do when scaled to the real world. The old correspondent banking system that ties up trillions of dollars of capital around the world in Nostro and Vostro accounts is precisely the sort of inefficiency Ripple has been discussing and speaking about that they want to eliminate. Now that banks are no longer caught up in the myriad of liquidity traps that exist in the different currencies and accounts, that money could be channeled into lending, growth, new services, and wider economic activity. That is why some think that XRP may turn into greater than a payments asset. It may be a larger, global tokenized finance and settlement system. Meanwhile, depository receipts, XRP, and exposure via the ETFs could provide a way for accredited investors to access XRP without having to make a purchase from a crypto exchange. That's important because it provides more traditional avenues for Wall Street and digital assets. It's the same with XRP ETFs and institutional products. Institutional interest existed in the past, but not this time. This occasion features the addition of the wealth manager, federally chartered custodian, ETFs, tokenized securities, on-chain settlement, and serious regulatory modernization. This is why many feel the next step might be quicker once liquidity returns and clarity increases. The overall financial conditions can also be a reason for the majority of individuals to believe that digital assets are taking a bigger role in the worldwide economy. Debts of the major countries have been increasing steadily. Worries about liquidity, inflation, monetary expansion, and financial instability have been growing. Meanwhile, several major components of the financial sector are talking about the next chapter in the evolution of the market: tokenization, blockchain settlement, digital collateral, and on-chain infrastructure. The modernization, interagency coordination, and the development of frameworks appropriate to on-chain settlement, which could occur in real time as counterparty risk can be algorithmized, have been priorities for SEC Chair Paul Atkins and CFTC leadership multiple times. The conversation about exchanges, brokers, dealers, custodians, DeFi solutions, self-custody wallets, tokenized assets, and digital commodities is getting much more serious. Where previously regulators, exchanges, institutions, and policymakers were talking just in case, this is now a discussion of just because. That's why many XRP holders think the market is undervaluing the pace at which the market could accelerate once regulation is finalized and institutions are confident. For years, the crypto industry has been battling uncertainty, lawsuits, and inconsistent enforcement. But the talk seems to be shifting away from merely getting by and moving towards the construction of long-term infrastructure. Overall, Ripple's approach to interoperability, its efforts to expand the XRP Ledger, the introduction of tokenized assets, the integration of stablecoins, payment systems, and institutional custody all indicate a future where blockchain technology is heavily entrenched in the financial world. Meanwhile, whale movement was seen during the past market weakness, where big buyers were seen accumulating XRP reserves and retail investors were seen getting nervous. When it comes to these investments, professional investors tend to behave differently from retail investors, as they don't panic and look for quick gains. The gap between sentiment at the retail level and sentiment at the institutional level is no longer something that can be overlooked. As always, a lot of people are busy with short-term market shenanigans, but institutions seem to be geared up for tokenization, digital settlement, crypto-enabled infrastructure, and an increasingly on-chain financial system. Coinbase's leaders have referred to this change as a generational shift, and regulators are talking about how to better align regulation and eliminate unwarranted duplication between agencies. It is no longer just about speculating with cryptocurrencies. It's about the structure of the market, liquidity, settlement, tokenization, and financial modernization. If just a small fraction of global finance can pass through these systems, associated with Ripple and XRP, then the size will become massive in the future, according to the XRP supporters. The discussion is now including real estate, debt markets, investment funds, tokenized securities, ETFs, stablecoins, and payment rails. For this reason, it is not surprising that many investors are still holding on to their investments after years of uncertainty and volatility. They think the industry is getting to a stage where institutional adoption truly starts to take off. It may be a slow or gradual change, or it may be sudden, but the direction of the conversation has definitely changed. The big guys are positioning, regulators are coordinating, tokenization is getting bigger and bigger, and on-chain finance is getting closer and closer. This is why XRP holders are feeling different as compared to the previous cycles. While the market may remain volatile in the short term, the financial transition and infrastructure, regulatory frameworks, and institutional interest continue with their own ongoing progress.